The next one is we will focus on the last performance evaluation tool na masyadong mas mahaba siya. Yung tinatawag po nating Economic Value Added or EVA. Okay. The Economic Value Added or EVA is a more specific version of the residual income that measures the investment center's real economic gains. Compared to ordinary computation of residual income, okay, the economic value added uses the weighted average cost of capital to compute for the required minimum rate of return or the required or targeted income. Ngayon, tatanungin nyo ako, how are we going to compute the weighted average cost of capital? Well, we will discuss it profoundly, kung profoundly pa tama ba yung term, or i-discuss ko siya ng mas malawak sa example na ibibigay ko. Okay? Well, but going back to the slide, take note, the minimum rate of return is based on the weighted average cost of capital, and that is the total assets of the company minus current liabilities. Take note, yung ibabawas po natin current liabilities, not the total total liabilities, the net of which shall be multiplied to the weighted average cost of capital. Ngayon, yung problema po natin dito is how are we going to compute the weighted average cost of capital? Madali lang sana if the problem provided in the actual CPA board exam binigay na agad yung weighted average cost of capital. Kaso meron po tayong mga examiner that we are required first to compute for the weighted average cost of capital before coming up or before computing the economic value added na mas madali lang naman sagutin. So, ngayon, I have an example. Okay? The company cost of capital includes the following. Okay, we have bonds, we have preference shares, ordinary shares, and it has its corresponding market values, flotation costs, and expected growth rate. Okay, so tatanungin mo, sir, bakit hindi po isinama yung retained earnings? Mamaya masasagot po natin yan as we go on. Sorry. Sorry lang po. As we go on this particular example. Okay. Furthermore, the company provided information related to income statement. The income after tax, then take note the tax rate for this is 30%, is equals to 14 million pesos. And the current dividend per ordinary shares is 3 pesos. The total assets presented in the balance sheet is 135,000 pesos. And the current liabilities is equal to 25 million pesos. Okay. So we are required to compute for the economic value added. But before we can proceed to the economic value added, problema nga po natin yung weighted average cost of capital. Kaya yung una po dapat natin gagawin is to compute for the weighted average cost of capital. Particularly in this problem, how are we going to compute the weighted average cost of capital? Una po natin gagawin is compute po natin yung cost of debt. Okay? Para ma-compute po yung cost of debt, we are required to compute the effective interest rate of bonds payable. Okay? Assuming that the par value per bond is 1,000 pesos and the market value of the bond is 1,250 pesos per bond, how are we going to compute for the effective interest rate? Well, going back to the problem, the nominal rate of the bond is 10%. Okay, we need to determine what is 10% of the par value. So that is 1,000 par value per bond multiplied by 10% nominal rate of the bonds. That is equal to 100 pesos. Then later on, we are going to use the market value of the bond, which is 1,250 pesos. Then multiply it to the net of flotation cost. Kaya nga po 100% is constant because it means 100% of 1,250. Kaso ibabawas po natin yung flotation cost, that is 5%. So that is 100% minus 5%. So yung kukunin lang po nating value is 95% of the 1,250 pesos. Okay, which is equivalent to 1,187.50. Using those two figures, we can easily determine the effective interest rate, which is 100 pesos over 1,187.5. Then multiply it by 100% para ma-convert po siya into percentage. So, the effective interest rate of the bond is 8.42%. Take note, this is not yet the cost of debt. This is just the effective interest rate. The effective interest rate, gagamitin po natin yan for the computation for the cost of debt. To compute the cost of debt, which will be used later on, and for the computation of the weighted average cost of capital, that is 8.42%, which is the effective interest rate, multiply it by 70%. Bakit 70%? Because we need the 8.42% a net of tax para malaman yung cost of debt. So, 8.42% multiplied by 70%, that is 5.89%. So, yun po yung cost of debt. Hindi pa po yun yung weighted average cost of capital. Itong cost na to is referring pa lang to the debt, which is the bonds payable in this particular problem. Take note the cost of debt. Gagamitin po natin yan later on. Then,